Do you think that this downgrade is going to turn out to be a short-term event that the markets will overlook in due time, in a matter of days?
No, I don't think so. I think from a longer term perspective, people are going to begin to thinking that they've got to diversify their holdings first away from the U.S. and also into equities, because that's a way to protect them from any deterioration of the currency, the U.S. dollar, or for that matter, any other currency. So I would say this downgrade is going to have a lot of people thinking about diversification, not only away from the U.S. market, but generally speaking, away from their home markets.
That's interesting, because we've had people like Larry Summers and Mohammed El-Erian say that this decision is pretty much absurd. And, you've had Secretary Yellen also call it a reaction to outdated data, that data progressively will look good. The reason, Mark, I ask you about whether or not the market reaction is short-lived is primarily because we've seen the playbook, right, in 2011 when the markets rallied post the downgrade from S&P. Would that not be the case this time around? And why are you calling in for such a strong diversification strategy outside of the U.S.? What's wrong with the U.S. markets at this stage?
I think the U.S. market is okay, and it will continue to do well, probably go higher from where it is now. But there's an incredible amount of money out there in fixed income and in property and other assets. And that money, I believe, is going to be being put into equities globally, including the U.S. But if you look at the total pie, I think more and more people will be allocating a bigger percent of their pie, which is growing, into international markets, particularly emerging markets.
Well, sir, it's Jumana here. Timing is everything when you're thinking about investing capital. And if you had invested in the Chinese stock market last year, the results would have been quite negative. In fact, we saw its biggest pullback since 2008. How did you navigate the storms around China in 2022? And what is your outlook for this year?
Well, we were out of China, actually, but depending on where you define China, but we were big in Taiwan. So we benefited from the incredible trade that goes between Taiwan and China. But the Taiwanese stocks did very well. As you know, if you look at the index in Taiwan, it's outperformed China by a long way. So that's the way we solved the problem. We also were not in Russia, so we missed that boat. So we've been in pretty good shape. And of course, the big markets, including Taiwan, Korea, and India. India has done very, very well.
Well, one thing I wanted to ask you about Taiwan as well is, the main chip that we talk about in relation to Taiwan is TSMC, the biggest foundry in the world. And one of the big themes that we talk about around the desk is AI, and how so many different investors are jumping into that trade, be it by investing in the chip manufacturers, the chip designers, etc. To what extent do you think the fate of the Taiwanese index is going to be very closely tied to what happens with AI and the ultimate rollout, whether that hype still has legs?
There's no question it's intricately tied to the what's happening with AI. And by the way, I just came back from Korea, and the same things is happening there. The companies that are related to semiconductors, doing all kinds of components and that sort of thing, seeing their order book filling up. So we're going to see a lot more activity in Taiwan and Korea in response to the AI interest. But I think in some ways, AI has been overdone. There's been a little bit too much emphasis on that. It'll be good. There's no question about it. There'll be more demand, but perhaps maybe not as much as people expect.